Well, TVS Motors is all set to launch India's first ethanol motorcycle. Parishit Luthra joins us to fill us in with all those details. Hi, Parishit. Good morning.
Well, Nigel, this has been in the works for some time. This is what sources are telling us, and we are hearing that an Apache 200, an ethanol version of the motorcycle, could be brought out soon. And as far as the pricing is concerned, we're told it will not be very different from the current Apache 200. As far as the volumes go, we believe that this would be launched in some of the sugar-producing states, some of the major sugar producers such as Maharashtra, Karnataka, Uttar Pradesh, Tamil Nadu, in the first phase. And this is something that has been the pet project of Nitin Gadkari and Dharmendra Pradhan. They have been pushing for more ethanol production. This is because the sugar mill owners and the sugarcane farmers have been stressed. The sugarcane areas have reached about 18,000 crore rupees, and very recently Nitin Gadkari had said that sugar mill owners need to switch to ethanol production or risk becoming dysfunctional. So it seems to be a good step in that direction. Let's see how this product fares in the market. We're also told that in order to ensure ethanol availability, the company could also explore a tie-up with sugar mill owners.
All right, Parikshit, those are interesting developments coming on in the automobile space, and we'll see how it actually goes through and what the demand looks like. But let's move on. In Singapore-based Temasek, which has over $230 billion of portfolio worldwide, is positive on India and wants to accelerate its investments from $11 billion currently. Banks and insurance sectors are attractive, and Temasek is looking to capitalize on the tech startup opportunities here. Nisha Pudar caught up with Ravi Lambha, India head of Temasek, and began by asking about the India investment plans. Listen in.
In India, we are at a record high now. We are at $11 billion of exposure in India. We are at 5% of the total portfolio of Temasek, which is also a record high. And you know, we have been investing over $1 billion a year for the last 5 years, 6 years now. And so net we grew in India last year. We were 4% last year. We were about $10 billion. This year we are 11 and 5%.
Right. From the union budget also, Ravi, what is the kind of sense that you get from the new government, which is in continuation to the last 5 years? Does that give you a little more certainty about investments in India? And are there any thoughts post the budget as well?
I think we saw the budget as a long-term budget. We have seen reforms put into place by this government in the first term. Key reforms being, as we talked about before, on the bankruptcy code, as well as on GST, and we expect that execution to continue. And we would expect them to continue to have more reforms come into place. And so we see this budget as a prudent budget. There may have been disappointment in the markets, as people may not have seen it that way, but I think on a long-term basis we find it positive. We believe that there are a lot of good tailwinds in India, and as long as we see as long as we see policy certainty going forward and clarity, we think it will improve the ease of doing business in the country.
Right.
And therefore all of those to us play out well as we think about increasing our exposure to the country.
How does your investment strategy in India change at this point? Because we have also seen a complete cataclysmic change when it comes to the overall economic scenario since I met you last year. Now, consumption basket, that one is seeing slow demand. Auto sector is going through its own headwinds. The NBFC financial services space has gone through a lot. The real estate ripple effect can also take place. Given all this, is there a strategy change in India where you have in the past mostly invested in mature companies, and is that going to also change now?
That's a good question. It's a very broad question. So let me break it up, right? So I think from the perspective of what we are seeing as volatility, if I can call it, and slowdown in consumption, truly there is a slowdown. And we think it's driven by certain specific factors, like NBFC issues, for example, have caused some slowdown in consumption. And short term, yes, there is an impact. But we remain positive on the longer term consumption theme in India. And we do not see that as being impacted for the long term. Now, looking forward, nothing has fundamentally changed in the way we think about putting capital. We are still bottom-up driven, as we have always said. We still like India for what it offers. It is a rapidly digitizing economy. There's growth coming out of digitization. There's growth coming out of, the middle-income population. More importantly, there are some trends that are playing globally that are very positive for India too. For example, the sharing economy is very positive for India. We think the connected world as we're getting into is very positive for India too, because truly we are living in a connected economy now.
Okay, let's get on to the economic data that we're expecting later today. Inflation for June is expected to come in higher on a month-on-month basis, while IIP is likely to remain steady at around that 3% odd. Starting with the CPI first, Ekta joins us early this morning to tell us what we can expect this time around. Hi, Ekta. Good morning.
Hi, Nigel. Morning. Well, for the CPI data this time round, we are expecting the data to, in fact, harden on a month-on-month basis. So, for example, the CPI for June 2019 is expected to come in at around 3.19%. So this compares to around 3% on a month-on-month basis. The range, remember, is anywhere between 2.9 to even 3.7%. So there's an expectation that maybe there could be some amount of flattish data or maybe even a slight softening which could come through. The core CPI is expected to be steady or sticky at around 4.2%. Food inflation is estimated to come in probably a little sticky this time, so 1.8 to 1.9% versus 2% month on month. Vegetable prices, remember, continued to rise, but it was fruit prices which moderated this time round. So overall, you can probably expect maybe a little bit of hardening as per consensus on the CPI, and the core CPI to probably be sticky at around 4.2%. For the IIP data, the estimate is that it should come in at similar levels as last quarter. So it's estimated to come in at around 3.3% versus 3.4% on a month-on-month basis. Now remember that core industries was actually very positive in the month of May. It came in at around 5.2%, and but it had moderated from around 6% in April. So the street is going with positive data from the core data. But remember that this is also a month where we saw auto sales which continued to be weak. It was at an 18-year low in terms of the PV sales. So that data obviously continues to weigh on the manufacturing, etc. But overall, we're expecting the IIP to probably come in at around 3.3% versus 3.4% month on month.
All right, Ekta, thanks a lot for that. We'll be watching out for those important macro numbers today. But let's move on to a Network 18 initiative. Join the water movement, and here is how you can save water by using recycled water for plant use, watering cans instead of water hose or sprinklers, and do not overwater your plants, and grow native plants that have adapted to drought stress. Join the movement to conserve water. Pledge to become a Jal Rakshak today. Log on to news18.com, Mission Pani, and pledge your support to Mission Pani.